Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 6th, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here, the ES is currently trading up a day, down a day right now, as price is in a range from 43.60 down to about 42.60. You've seen the down a day, up a day, down a day, up a day, and now down a day here as we head into the RTH Open. This is one thing we talked about in our trading room and pre-market yesterday. You know, if we head higher, we likely head about as high as 43.60 and no farther, maybe 62s, but then from there look to fade back down toward 3-day lows here in the next session. It's already happened now, and we have a kind of a wide-ranging inside day right now. The ES is trading 85% of ADR with a range of 65.75 points. That's pretty significant right now, and it's been averaging 77 points a day on a 10-day basis and 84 points on a 5-day basis. So quite a bit of volatility ever since we saw the FOMC level come and go. But also a couple of days before that, we saw increased volatility with a downward bias right now. Again, we have lower value relationship here on the pivot range month over month, and primarily speaking, any push into that zone is a selling opportunity for new lows until it can overcome the midpoint of that month by the end of the month, and that's 43.86 is here. Can it close or push through that zone by the end of the month? Actually, it's a little higher. There it is. 44.21 is the midpoint of the month, way up there. You really have to be able to get through that by the end of the month in order to change the bias, which means we could have quite a bit more weakness, or at least movement to the downside toward this previous quarter's low until we see a more significant sign of rejection. So right now, still in the wide-ranging trading range. From an intraday perspective, we could go right back up to the midpoint and higher and continue to trade back within this range. But really, until we get above 42.60 or below 42.60 or above 43.60, we're in the range. Here's a look at the NQ. You'll see the NQ is also pulled back here. This one is also tested the previous quarter's low 3 days running now, sitting down here near the previous quarter's low. So far, prices above the previous quarter's close have been offered. And again, 5 weeks down right now, with a shot to see lower prices as deep as 14K. One of the things we talked about in our monthly outlook on Monday was if price were to drop into 14K, 14K could open up a move into 16K perhaps by the end of the year or into Q1. But we have to see how a good reaction occurs there, or should a good reaction occur there. That could provide an opportunity. Price may not bounce precisely off composite VWAP there. Instead, it may come a bit below it, as it has before rallying higher. Here was before it rallied. Again, how much farther do we go? Do we not even get into that zone? Perhaps market structure keeps us in check here at 14.2, and that might be enough. So again, watching to see how much more downside we get here, but really got to hold on to that 14K. A failure to hold that level for long could open up a rotation much deeper on a longer term basis. So previous quarter's low, very important in many quarters, but to test it 3 days running without rejecting yet, again, suggests maybe more of a flush to come, or perhaps a breakout and no rejection at all. So got to continue to watch that previous quarter's low very closely. Taking a look now at crude oil. Crude right here, we had a buy the dip idea going into today's session, which means any morning weakness could be bought for continuation to 80. The idea was if we pulled back to the previous session's midpoint of 78.50, 78.50 could provide a $2 rally to 80.50. And right now the market is actually averaging $2.08 per day on a 10-day basis, and $2.36 per day on a 5-day basis. So again, $2 is about an average daily range here, easily over the last 1 and 2 week splits, and right now we're at 201 with the high here today coming into the 79.78, just shy of 80, and now $2.01 of range to the downside puts the low today at 777s. So are we reaching a top up here? Are we going to hit 80? Or is this going to be a strong up move to begin the week, followed by a strong reversal to end the week? Are we going to end the week with a large sell tail at these highs on a weekly bar basis? Or does this pullback get bought and we continue higher through 80? Remember, if we can close through 80 by the end of the week, that could be a significant transition phase that opens up the next market structure above between 80 and 110. But a major rejection of this zone here could open up a pullback, as shallow as 70 and perhaps as deep as 60 to 62. So this is a very important zone right here to continue to watch. Today on an intraday perspective, strong top this morning, sold off to a strong low. Look for a bounce back toward the midpoint. Today's midpoint 78.78. Right now we're about 50 ticks off that zone. A retest of 78 could provide a bounce into 78.78 and perhaps a test into the previous session's close just above 79. So retesting 78 could bounce this thing at least 1 point higher here during the session. Let's take a look lastly at gold futures. Gold here playing out kind of how we mentioned yesterday. You can see again the market holding that 1720 level. It's been very important, moving backward as well. Nice stop run day through those highs, and now you can see here how price is holding 3-day lows here, drop down and now holding back above those lows. That's what we mentioned yesterday. Price could drop as deep as 1740 here on this next pullback and provide a move into 1780 right there. Continuation into 1800, which is also value in the 200 period average and an FOMC key level. And if you're going to get through the midpoint here at 1780, it opens up this top of the range. That's just shy of 1840. So 1740 could ultimately lead to 1840 up ahead. Today, failed new low, looking fairly decent. The intraday time frame showing kind of a rounded bottom and a rally off those previous sessions lows. That's very strong. You want to be able to hold these gains here and look for expansion in the days ahead toward 1780, 1800, and 1840. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.